in the 1930s or, before that, there was some sort of peg, right? There was like a gold peg. So everything would unwind, but in the fractionally reserved system, banks would go bust. There was bank runs, but ultimately like someone ended up with that gold bar, that bearer asset. Well, we don't have a bearer asset anymore. It's all fiat. It's all IOUs built on top of each other.
All right, welcome back to Generational Arbitrage. I am Tyler Neville, sitting down with Dylan LeClair. So far, you've only heard from old white guys on my podcast, but today you're getting a little hint from the younger generation, the Gen Z generation. So I'm hoping this will be a little bit different. Dylan is the co-founder of 21stparadigm.com. It's a firm that helps individuals and businesses integrate into the Bitcoin network and utilizes Bitcoin as a reserve asset. He also writes the Deep Dive Monthly for Bitcoin Magazine. Dylan dropped out of college to pursue the opportunities in Bitcoin and has scaled his social media presence to be an up-and-coming voice in the Bitcoin community. He is the personification of decentralizing power and the future of economics. So Dylan, welcome, man.
Thanks for having me on. Excited to chat with you.
Do you like that intro? Was that did I pump your tires enough or what?
Yeah, that was good. You pumped me up a little bit. So
best one so far.
Yeah, for sure.
Hey guys, I wanted to invite you to a special event we're having from August 11th to the 13th in Bretton Woods, New Hampshire. We're going to be talking about the future of the monetary system at a very historic venue too. We're going to have speakers like Mike Green, Lynn Alden, Pippa Malmgren, Grant Williams, Dan Tapiero, Jeff Booth, and a variety of others. And maybe we'll even have a special guest as well. So come join us. I'm really excited about it and hope you're there. So let's dig into your background. Tell me about yourself, where you went to school, and kind of your journey so far.
Yeah, so born and raised in Vermont, still here, pretty small state. Went to the University of Vermont, about 10 miles from home. So didn't venture out too far, studying business and economics. And that was during the 2019-2020 year. COVID hit, and I was kind of falling down the Bitcoin rabbit hole. So decided to just drop out because the Keynesian economics, kind of what I was learning, what I was paying to learn, wasn't. I didn't really find it worth the investment, both for like the money, but also just my time. And at the same time, I'm like learning on Twitter and podcasts and anything like that's out there for free, basically. So. Just dropped out, picked up just run of the mill manual labor job for 6, 7, 8 months, not even sure. And kind of at the same time I'm on Twitter hanging out. And I, one thing turned to another, and I started up at Bitcoin Magazine in February or March. Actually before that, started a 21st Paradigm because I was getting a ton of questions about Bitcoin, having been that Bitcoin guy for a while. And friends and social circles and stuff. And it was just kind of taking up a lot of my time, especially after Bitcoin passed the all-time high and the frenzy kind of started up.
Oh yeah.
And I just found myself like kind of squeezed for time. So started that up as kind of just like a small side gig to help like local businesses and individuals kind of figure out what was going on and how to think of it. So that's been good. And went from like media ops part-time with Bitcoin Magazine and like in March to covering more financial markets to now doing the Deep Dive, which is like a daily newsletter, but also we do like monthly reports. It's 20 pieces of content a week, and we cover like global macro, derivative markets, and on-chain stuff. So yeah,
it's super impressive what you do. I spent almost 15 years in financial markets, and at 20 years old, you're already surpassing me. So if you haven't checked it out, check out Dylan's work. It's really good stuff, dude. So that was a really divergent move. You dropped out of college. You saw the cost of college. Can you talk about basically what is going on in your generation from, internal? Like what's the vibe from all your friends that are going to school and they come out with this giant debt burden, and are they like feeling jaded? What's the psyche behind that?
Yeah, I think there's kind of a stigma about not going to school. It's more just implied. It's not it's not really like too in your face, but you go to school you're in high school and there's like a university day and everyone wears their t-shirts, or where they're going, and like
Mhm.
the kids that aren't wearing a t-shirt, people are like, oh, did you forget your college? And they're like, no, I'm not going to school. And they're like, oh, I'm so sorry. Like,
Yeah, yeah.
and so there's just kind of like an implied, like, not shame per se, but it's like, oh, you're not going to school. Okay. Oh, well, you'll figure it out. And it's like, yeah, I know I'll figure it out. And so, and I think a lot of people, there's just a social pressure to go without even an evaluation of the cost, right? Like, if you're looking at college as an investment, right? And an investment, like if you're thinking about it in terms of finance, like a company can be a great company, but you don't buy it if it's extremely overpriced, right? Like, you're looking at it in terms of return on investment. So
Hmm.
college can be, a great time. It can be awesome for the social scene, and you can even get a good education. But what's the cost that you're paying for that, both with your time and in terms of money? And
Hmm.
so and there's also like many people just go for the social scene, which is understandable, right? Like, that was honestly one of my favorite parts of it was the social scene of living with 10,000 kids your age, no doubt. But what I was getting back from it, in terms of education, especially after we went home with like COVID, and it was all Zoom, right? Like, talk, and at the same time, like, if you go on YouTube or watch your podcast or watch anything that's out there for free, it's way better, or at the same level, but it's right,
Yeah.
it's free. So um, there's just, I don't know, I think there's not enough talk that goes into like evaluating this stuff, and I think more and more people, and I encourage people to really sit back and evaluate it before they just kind of sign the dotted line and end up six figures in debt.
Yeah. What you did is really impressive when you think about the social pressures of college. And like you said, like you are making a decision that is, divergent to 90% of people coming out of high school, right? And to do that, and not only you forego the debt, but then you have revenues immediately pursuing a secularly growing industry likely. So I hope that serves you well in the future. But can you talk about would you ever bring up with your college professors, hey, like, you're teaching economics and investments, and I'm here, you know, saturated in debt. And how can you juxtapose those two ideas where like they're teaching you about the textbook definition? Do they ever talk about like negative real rates? Like, how do they square that circle of charging you an arm and a leg, and then you come out of school and have like a mediocre salary?
Yeah, it's it was kind of funny. There was like, I took like macroeconomics and microeconomics, but macro in particular, there's a lot of things, and like I love macroeconomics. Like, part of my newsletter I write about is global macro and what's happening in fiscal and monetary policy and all of that. But it was quite obvious. It was like they were reading from a textbook that was probably half a century old. It was like, inflation is good. And okay, what is CPI, or what is inflation? It's CPI. Okay, what's CPI say? Well, inflation's been under 2% for the last decade, right? But the price of this education has gone up 10% compounded annually for a decade. So what does that say? And like, it was just little things like that where you'd say, well, why is inflation good? And I say, well, because if prices went down, then no one would buy anything. It's like, that's not true. Like, yeah, I
Yeah.
would still go to college if it cost cheaper. And so there's just little things like that where, first principle thinking kind of dismantles the dogma that they teach, and it's not just about economics, but like, you're forced to take all of these other classes that you don't want to take, and prerequisites and all this stuff. Like,
Mhm.
it just, it didn't really add up for me. And I think a lot of people kind of feel the same way, but are afraid to take action.
Yeah, that was starting. So I'm 37 now, and I feel like that was starting kind of around my generation. Like I'm a older millennial, and I personally like I talked to my parents about dropping out, and they were like, no way in hell, and so I ended up staying. But like it definitely crossed my mind. I was like, I'm not really learning that much. I went to a top 25 school, and the social aspect was why I probably stayed more so. So I'm now that the tuitions have probably even went up, I don't know, God, another 40% since then.
Yeah.
I mean, it's astronomical and crazy at this point. One other thing that, you know, we didn't deal with as much, but I kind of wanted to pick your brain on is I'm kind of, I have no particular political sides, but I've been increasingly hearing that like it's really hard to have a diversity of thought on college campuses. Can you talk about your experience there? And was it a Vermont? You know, Vermont's obviously like super liberal in itself. And can you talk about kind of how that ethos bleeds into the university scene?
Yeah, there's definitely some irony because they, kind of the liberal approach, and not even talking about liberal as in politics, Democrat, Republican, whatever. It's more
Yeah,
of just, kind of the state of our generation, I guess maybe. But they push, quote unquote diversity of thought or character or race, gender, whatever, and in reality, it's a monoculture of thinking and ideology,
yeah,
or like where if you don't align with the diverse quote unquote thoughts or kind of generally accepted line of thinking, then you are a bigot or you are uneducated or you are XYZ. I mean, it goes on,
yeah,
and so there's just and it's in the economic sense, when they're teaching like supposedly about econ, finance, etc., it's increasingly, maybe this is a harsh term, but like it's increasingly like a Marxist ideologies, where you have professors up there that are pretty blatant proponents of universal basic income and socialist type things, and that's fine. You're entitled to your own opinion, but teaching it as though it is, just accepted generally, and there's not even any talk of the cost of, or like the maybe the downsides of any of these policies that are supposedly no loss kind of things, or must have policies, or like
hmm
it kind of rubbed me the wrong way, and yeah, it like Vermont in particular is it, not even just UVM, is pretty
yeah.
kind of, I don't know, like the Bernie Sanders
Contingent.
economic train of thought.
Yeah, I'm generally apolitical, but it is funny analyzing. I try to be as objective as possible. Obviously, like everyone's got biases, but it
Yeah,
seems like the from what I hear from the younger generation, this is a very uniform statement you get when you really get behind the closed doors with students, and they kind of tell you this stuff. So thank you for saying it on the record.
yeah,
It's pretty brave, and honestly, like what you did to leave, and you're pursuing a community. I think that my ideals think that like Bitcoin embraces all that is, you want to learn and grow and have that diversity of thought that embody those like principles that you were talking about without kind of like the stifling nature of this like giant institutional kind of
yeah,
thing overhanging you. So
totally.
pretty amazing. Also wanted to dig in. So when I was growing up, I heard Aesop's fables and the tortoise and the hare, right? Those were like things that we all grew up with. I think you probably did too. Where the hell did that story go? And do people like still think like that? Because it seems like as soon as you get out of college now, you have this giant debt burden and you're already sprinting to try and just like pay it off, right? You can't save at that point. You're forced to like take jobs right out of college just to pay the debt. So you become like almost a serf, right? Is that
Yeah,
your experience? Do you think that's a fair statement?
totally. I mean, and this is like going a little bit deeper into like the whole fiat regime, this like debt based monetary system, especially kind of the later stages of it, which, in my humble opinion, we are in. Savings is kind of basically non-existent. It's either, like everything, you're incentivized to take on debt. It's take on debt to invest. Take on. I mean, that's, I guess, in a sense what college is. You're investing for your future by taking on these outrageous student loans that are not able to be defaulted upon. Like I can't go to the bank and get $100,000 to start a business, or to try to buy Bitcoin because I've tried. But I can go to the to school and sign up for $60,000 a year with no questions asked, without even a look at my credit score, which many people at 18 don't have, like rightfully so.
Yeah.
And so it does just put you have an entire generation of millennials, and not so much my generation yet, although we're getting there, that are living with their parents. They're struggling to find jobs. The job market is pretty, some strong in areas, but pretty weak, especially following COVID. They're not getting as paid as much in real terms as their parents were by a long shot. And they're priced out of the housing market. And, and what they're doing is they're just basically barely paying interest expense on their student debt. And so it's a massive, and there's some stories that are just absolutely tragic. Like someone's making $30,000 a year out of school because they got a poli-sci or gender studies, or, I'm not trying to poke fun at anyone, but just in general, these degrees that are supposedly valuable that don't really have a high value in the labor market. And they have hundreds of thousands of dollars of debt. And realistically, there's just no way to come back from that, or it's extremely challenging. And so I think there's just something inherently wrong with the process. And that's due to a lot of things, including basically a monopoly over capital and money, which is kind of the whole fiat paradigm we're in. The price of money being artificially set, and the government kind of having a monopoly on how that's issued and directed. But that's another conversation.
Yeah. Well, can you dig into now that, I bet people thought you were crazy when you first jumped from school into Bitcoin. I bet you they're starting to be like, okay, maybe he's not so crazy anymore. Can you talk about how, I think you ended one of your newsletters and said, you quoted Victor Hugo, and he said, "Nothing is more powerful than an idea whose time has come."
Yeah.
Are you starting to see those tentacles spread, those ideas that you had kind of branch out into your social network and your friend group?
Yeah, totally. 2020 was kind of an eye opener for me, where I was stumbling down the rabbit hole of Bitcoin for a couple years at that point, or almost. And then 2020 happened, COVID and the financial markets. And I'm at the same time, I'm reading about Dalio and his debt cycles. And I read Jeff Booth's book about technological deflation, and just basically how the internet is reducing the cost of information and education to zero, and dismantling all these industrial age jobs and careers. How inherently that's a good thing, right? But that's not compatible with our debt-based monetary system. And I kind of connected the dots for myself. I'm like, that's so true. I'm reading this book. I'm reading I'm reading all these articles and listening to podcasts and learning all this stuff, and it's costing me nothing. And I really believe in this Bitcoin thing, which may or may not be a solution to an implosion of our monetary system. And I need to get my hands on as much of this as I can. And so around April or May, I decided I was going to drop out, and I told all my college friends, I was like, hey, I'm dropping out. And they were like, why? And I was like, well, I need to buy as much Bitcoin as I can. And it was and they looked at me kind of crazy. And sometimes I didn't just deliver it like that. I'd be like, oh yeah, I'm deferring. I'll think about it if I didn't want to go down that conversation, because that's sometimes turns into a pretty long one. But yeah, the price of Bitcoin was 7,000 or something. And, I bought every day after that. I've bought, I'm still buying at 40 or whatever thousand, because it's not a trade for me. Bitcoin is savings. And that's how I viewed it. The price of college for me is denominated in Bitcoin terms. The price of my time is in Bitcoin terms, and everything, I've gotten a pay cut over the last, year as the price of Bitcoin is 4x'd. And so I think when you evaluate things in or opportunity cost in Bitcoin terms, everything, looks a lot different. And so I kind of had that realization, and that was pretty much the leading factor of me dropping out. and a lot of my friends who I've kind of been, I guess, like preaching to or evangelizing to, have started to come around to, maybe I'm not as crazy as I seemed last year.
I love that. That's like a great sign. Now it's just time to scale it. But
Yeah.
can you hit me with a story about when you went to a bank? I one time, I think this is like 5 years ago, I went to Bank of America and I tried to take out like I think it was 10 grand of cash to buy gold coins, and they looked at me like I was laundering, drug money for some cartel, and I had to fill out like all sorts of paperwork. Was that your same kind of experience?
Yeah, well, once I got a credit score, it was like, I think just like 650 or 700 or something. I'm like 18 and a half.
Yeah.
And like, I'm starting to build it up, and I try to just go to a bank and get it straight up. I'm like, yeah, I want to buy Bitcoin. And it was like insta decline. I was like, all right, well, I learned there that that's not the best route. And so then I was like, all right, yeah, I want to start a business, that's, we're going to be, I haven't really figured out the business model yet, and they were like, no. So,
You should have went to a
ultimately,
venture capital firm.
yeah, yeah, I'm investing in this new coin called Sats. No, but eventually I ended up just, funny enough, and I like posted on Twitter, and a bunch of people, like, some people called me super smart, and some people were like, you idiot. But I got a bunch of, I applied and got accepted to a bunch of like 0% 18-month APR credit cards. And so like that was like last August or something. And I just maxed them like without thinking like twice. Is like 18 months speculative attack.
Man.
And so did all right on that. I mean, even, like honestly, like I will tell people and they think I'm an idiot. But like I've used it like credit when I've had the ability to, even at 15% interest, to buy more Bitcoin, like, or like, expenses on that and use my income to buy Bitcoin. And while Michael Saylor can do it at 6.5 or 0 or whatever, I think it's a pretty solid bet that Bitcoin appreciates by more than that over the next 5 years. So ultimately I come on top on that trade. And I'm willing to hold through volatility. So, yeah.
I hope you can refinance lower.
Yeah, me too.
When your balance sheet gets bigger. But so let's get into your dig into a little bit about like your Bitcoin analytics and framework, because you want to go into kind of your last research deep dive for July and kind of talk about the illiquidity of Bitcoin, and that's kind of like where you start, right?
Yeah. And so, yeah, I just published for the deep dive our July monthly report, just kind of covering like the biggest things that I kind of saw and what was driving the price action. And so, like, I mean, the biggest thing to kind of understand with Bitcoin is like the dynamic of stackers and hodlers, essentially. Like that's the bull thesis, like in a sentence, right? It's like you have a cohort of people around the world that's growing, that are buying and never selling, or not for sometimes ever, but decades, years, etc. Like there's just constant accumulation, and since 2020, that's especially like ramped up. You just saw a massive amount of basically coins becoming illiquid, and so in May that kind of reversed in a big way, and we saw a pretty 50% retracement in Bitcoin, and there's a derivative market blow up. And then a country announced Bitcoin as legal tender. And since then, it went from 39 to 30 after that news, and people were like, what's going on? But at the same time, there was this massive reaccumulation, basically like by strong hands. And the price was going lower because we had a lot of like basically bears in the derivative markets that were naked shorting using stable coins and other forms of margin. And so even though like, in the spot side of things, there was a lot of accumulation, and just like basically people sending it to cold storage, people putting that away, prices trending lower because of derivatives. But ultimately, like I like to describe it as like a beach ball being held underwater. It's like eventually there's that burst back up to the surface, and that's kind of what we saw. What was it, July 25th, when there was that massive short squeeze on Sunday. It was just due to there was just too many people that were naked short, and they all tried to cover at once. and there was a massive liquidation because ultimately, like spot demand, spot supply and demand is what drives the price action.
And one of the things that I found really like, one of my theories about the financial system in general is like everything trades in the margin, meaning like the float of tradable financial assets is kind of constricted right now, basically because you have this generational, overhang where you have boomers own the majority along with the silent generation. Gen Xers a little bit less, and then millennials and Gen Z have like negative assets.
Yeah. Yeah.
And like when you think about it, if you're a boomer, you're sitting on like 40 years of gains. Why the hell would you sell even in a 20%, downdraft? You've seen like a generation of assets rising. So that in itself psychologically constricts the float of like, I guess like any asset. I think Bitcoin is that on steroids, where like you have a what is it, 80 vol asset, implied vol asset with a float that's choked. Like you could really see some crazy stuff. There's no, price could go to $1 million a coin. And so that analysis, what's so really funny is like in legacy financial markets, everyone analyzes it off of like these fundamental value principles. But when you really dig into the market structure, I think you understand investment way better. It's like, who are the actual buyers and sellers of this thing? And because all those fundamental analysts can't tell you why the PEs are like through the roof right now in the legacy market, but it really is a market structure thing. The float's choked, and like every incremental, there's no supply that's getting unleashed on the market. So I find your analysis of Bitcoin like really fascinating, and the only thing is it is volatile. Like you have these derivative players, and if you see people making a lot of money, you're gonna get that kind of like overreaction, right?
Totally. I mean, that's a great point. Like equity markets, I think, just over the 21st century, like passive has become a pretty major player. I think it's like the, driving force now in equity markets, but as well as Bitcoin. And you see just, with retail and like people in their 401ks and retirements and whatever, it's just like passive flows into equities, buyers at any price. And that's almost like a vol suppression in a way, right? Like you have passive indexation and like share buybacks, which are both like vol suppression. And then, occasionally you'll see these like massive, mean reversion things. Or if you're talking about like Tesla and like a super low float stock with like massive gamma squeeze, like, and you get a bunch of shorts getting wrecked. That's kind of what we see like sometimes with Bitcoin, except, unlike, if you're talking about like meme stocks or something that's like going through a short squeeze, there's no one in Bitcoin that can sell more shares. So like essentially what's happening is like you have this massive, like people call it like a sat squeeze. Like it's essentially what it is. It's like every single minute that goes by, like I got my DCA set up, and Michael Saylor, maybe he's not buying today, but he was essentially dollar cost averaging hundreds of millions for a while there. And you have like all these people that are like, hey, I'm just going to acquire a little more of this every single day, regardless of price. And which is why the price will never the price could go down 70%. Like, I don't know. It might. I don't think it will. But what's going to happen there? You're going to have relentless buyers, and eventually everybody that wants to sell gets out. And so, you have no one that's able to come in and dilute the supply like you would with an equity if, it got past fundamental value, if you want to call it that.
Yeah. I think Paul Tudor Jones said even in March of 2020, when it fell to like, was it 3,500 or something, the low, 80% of holders didn't sell. So it was like extreme flow choke. And then one of the fascinating guys, Eric Peters of One River, I don't know if you know him. He's basically a volatility. He managed a vol fund for years and years and years. And he's like, he says about Bitcoin, there's no supply response. It's actually the first asset where like there's no supply response if price goes up. So like the convexity is like insane. Like it's GameStop, it's AMC all wrapped into one. As soon as you get that psychological change, like we could really see it cook again. And especially with all the generational gaps of wealth, I gotta think that like inevitably people will lead there. And the debt markets are financing Michael Saylor now, at 6%. Like if you're a corporate, it's like a no brainer to me. But I guess the corporate mindset hasn't flipped just yet. You probably need it through like 60K again.
It's coming. It's coming. I mean, hundreds of trillions of dollars of debt that's essentially zero yields, or real yield, right? Like,
Yeah.
I think it's like 20 trillion of nominal negative yielding debt in the world. And so like Bitcoin takes 100 basis points of that. And I don't know what that does to price, but it more than doubles or triples the price of Bitcoin, because like, again, like the float there's not 21 million Bitcoin for sale, or 18, or whatever the supply is at the moment. There's not. And then when price is set at the margin, like there's not much spot demand. There's not much spot selling. Like anybody that's been kind of bearish on this asset is already sold, especially from 60 to 30K. You got a lot of like all of the losses, like the realized losses on chain. It was all 2021 investors, and you can see that because the UTXOs were like super super young, like and all of like the OGs or anyone that's been here since 2017 or even 18, 19, 20, like they're just chilling. Like like there wasn't much activity on chain. They were just like, all right, like I'm only up 3x now. Like, oh darn,
Yeah.
You know what it's like?
It's like it's like a baby boomer who owns their house and the housing market pulls back, and they're like, I'm still in the money. Like if you're a San Francisco like real estate owner, you have this tax base that's so low, and you're already in the money like 500x on your place. You're never going to sell it. I think that's similar to that mindset, and people have a hard time kind of like wrapping their head around that. It's really fascinating.
Totally.
So let's get into, I guess, well, actually I want to ask you, we brought up negative real yields. Does your generation get that, say inflation's at 5% or 10% of in terms of college tuition, do they get that like if their wages don't rise that much, they're actually like losing money? The whole principle of like negative yield or investing to keep up with that rate of inflation.
Yeah. I mean, I'm not sure. I know there's certain people that definitely get it. I have like, I've made a bunch of friends in this kind of space, and, young people that are super, super sharp. I think in general, like there's like, I don't think there's much thought, especially like in college or, while you're still kind of in the shelter of like, the high school college bubble of, maybe like your parents are supporting you or whatnot, about like, why do prices go up every year? I've tried to I've successfully orange pilled like a lot of people, being like, all right, explain to me why the price of real estate and the stock market and every, whatever, why is it up 30% this year? Is it that the houses become 30% more scarce? And they look at me and they're like, And I'm like, okay, well, just like, what do you think? Like, what maybe the money supply increased? Like, is that possible? And like, it sends people down kind of like this intellectual journey they've never taken, because like inflation, even in like college, right? Like or like econ finance, it's like explained but not explained. Like it's like CPI 2%, got it. And
it's like abstract
most people
concepts, right?
Yeah, it's like, okay, yeah. And like there's never any thought to like, what if that's wrong? Or like what if CPI, or what if inflation, there's no inflation rate, and it's like Michael Saylor says, it's like a vector and it's different for everybody. And the inflation rate of someone that's, attending school, or like what's the inflation rate of someone that's looking to buy a home? It's like 25%. like, and so I think there's definitely gonna hopefully be a switch where people start to realize, and maybe Bitcoin is kind of moves the needle here, and like there's more of a change of thought in terms of like opportunity cost, and like I got a raise of $1, but in real terms, like I'm getting paid less, like far less. And I've tried to do my best in helping people there, but I think there's still definitely an information gap.
Yeah. Interesting. I think inflation, if it really keeps up on the rates at 5% CPI, people start kind of asking questions, and there is like this labor push. I talk about the battle between capital and labor a lot, and it seems like labor is now realizing, oh my god, like we're not procreating, like the birth rates are dropping for the next generation. We should probably do something about this, and I gotta imagine, wages should probably rise to satisfy the debts at some point, but I don't know, the jury's still out.
We'll see.
So let's talk about, like, this is funny because you talk about short volatility and how Bitcoin is a call option and a put option, and it's a long vol kind of play that has no theta bleed, which is time decay. These are concepts that, like, it took me years and years to kind of like wrap my head around. Can you walk through kind of like how it led you there, and what you view Bitcoin is as a hedge in a long vol play?
Yeah. So we covered it a little bit earlier with, like, how basically the Fed put for the last, I think since Greenspan, like 87, is basically been a big vol suppression scheme, right? Where the Fed comes in, and whenever there's the market has a tantrum and draws down, they'll cut rates or open a repo facility, or, since 2008, and the TARP bailouts, they'll do QE. Basically, it's all vol suppression. And so what we have are credit markets, equity markets, real estate. It's everything. Any asset that you hold is essentially you're implicitly, like, you're short volatility. And volatility, is the asset class that, in March of 2020, if you're long vol, like you quadrupled up or whatever, right? It's basically negatively correlated to everything. But if you're long vol, it's you have that theta, you have that time decay where, if, and like I in my monthly report put like a VXX, or like a vol ETF, and like nobody holds that thing for a decade, obviously, but like since 2011 or 12 or something, it's down like 99.99% because it takes like short dated 1 to 2 month VIX futures and just continues to roll it over. Well, if you look at like the VIX, it's constantly trending down until it's not, and there's like a vol spike in equity markets, and everything, and every asset draws down. But just the nature of central banks and how they react to this, it's just basically more of the same, and it's like a big vol squash. And so, essentially in this kind of debt-based monetary system with, if we are at the end of a debt super cycle where rates can't go any lower, I guess in nominal terms, we're at zero. They can go lower in negative, in real terms. And like, there's a lot of real negative yielding debt out there. But essentially that's kind of the only game they have is to keep this system going with more and more debt. They have to push real yields lower. And if they do that, then vol can kind of continue to be kind of squashed. But if not, there's a huge debt problem. And so what does that mean? Well, that means defaults. That means, asset values plummet. Because of that, you have less collateral to borrow, liquidity tightens, and it's a kind of self-reinforcing bust. It's, people think of depressions, that like the Great Depression was a private debt bubble exploding. Now we have an everything bubble. We have public sector, private sector, margin debt off the roof, everything. And so, every investor is essentially, if you're long the everything bubble, which has been your incentive over the last 40 years, then you're short volatility. And that's, done you quite well. But now, in 2021, there's not much, there's the lemon's kind of been squeezed. And you can still nominally, I think you'll do quite well in equities, in real estate, et cetera, over the next decade. But in real terms, like, you're probably just kind of keeping up with the monetary debasement. And there's going to be violent unwinds along this kind of path. I don't think it unwinds all the way, because they're going to, the Fed, the ECB, all these global central banks will step back in to kind of plug the gap. But ultimately, volatility can't be destroyed. It can only be like, transmuted. It can only be transferred.
Yeah. The old Chris Cole line. Yeah.
Yeah. And Chris Cole's been all over this. But in my opinion, and Chris Cole, talks about how um, Bitcoin or crypto is kind of is one of the long tails for the inflation, right? And how on the other side of it you have volatility and other asset classes for deflation. But I kind of view it as Bitcoin is in the deflation side of things. If there's that deflationary long tail where basically everything goes busts, and there's this huge unwind in the banking system. Well, just how the fiat monetary system works, like in previous unwinds, say like in the 1930s or before that, there was some sort of peg, right? There was like a gold peg, so everything would unwind, but in the fractionally reserved system, banks would go bust. There was bank runs, but ultimately, like someone ended up with that gold bar, that bearer asset. Well, we don't have a bearer asset anymore. It's all fiat. It's all IOUs built on top of each other. And so if everything unwinds, like if the Fed stopped QE, or if just like they let everything go, Congress didn't pass another stimulus package, and they just said, all right, let's see how things figure out. Like there was a good chance, like all the banks would fail. Like everything would unwind and go to zero. The S&P 500 would be below 1,000. Like it would be super violent because in a fiat system, lending creates money and debt defaults destroy it, and so they would just unwind all the way down. And in that situation, long volatility, you'd make a killing. But the thing is, with that vol is you're basically holding, or you're paying insurance every single month. You're paying that theta that's gonna basically continue to be eaten away if it doesn't spike and you don't get to cash out. And so I view Bitcoin, because of its assurances of 21 million, the ability to self custody and have no counterparty risk as a monetary asset, and the proof of work and like the costliness to produce Bitcoin, and like with the difficulty adjustment and all of that, to be kind of this hedge both against credit expansion, and the quantitative easing and everything that we've kind of seen over the last decade, and a lot of people expect over the next decade, with financial repression, keeping yields below the rate of inflation, and just kind of slowly eroding away the debt in real terms. I view Bitcoin as that inflation hedge, but I also view Bitcoin as a deflation hedge, in that if everything does unwind, you have your keys. There's no counterparty risk there. There's no fractional reserve risk. I mean, unless you have it on an exchange or whatnot, but it's kind of a two-tail asset that because of its assurances will be there.
Let me give me your prediction for Bitcoin on a 3-month, 6-month, and 12-month horizon, so I can make fun of you when you're wrong.
Alrighty. Let's think. All-time highs broken next 3 months, maybe not 3, but before 2020 is over. I think we're at past all-time highs. Maybe not, but I think a lot of big money secured some positions at 30,000. Just looking at like spot volumes, and a lot of the guys that came out in support of Bitcoin over 2021, they don't like buying aggressive parabolic rises in price, right? Like I don't like chasing. You saw like that credit fund, Golden Tree, I think, pure debt fund. They bought Bitcoin, and I think they bought it for kind of the same thesis as we just talked about, where Bitcoin is this hedge against fiat on both tails. And so I think there's going to be more of those announcements, and they're going to try to keep it under locks. But I think under the surface there's some big accumulation going, and I think with Bitcoin and kind of the reflexivity of a bull cycle, and what you see with like accumulation, and especially if like derivative markets, we see this like a little bit of like that futures curve and contango come back. That's kind of like that acts as like a big pull for capital from legacy markets when you can enter a delta neutral position with 20% annualized yields. I think that returning would be super bullish. And so I think all-time highs before 2021, and then once we break that, it starts to get crazy. And I think we kind of see maybe like the 2013 like double bubble, where it turns into a frenzy, and prices set at the margin, and there's not many sellers, and there's a hell of a lot of buyers chasing. And so that does that looks like 6 figures plus, probably, I think. And I don't know where that top is, but yeah, I think the Michael Thaler thesis is gonna be true.
Okay, so in a world, this is the last question. In a world where that happens, do you see kids making more decisions like you did, where it's like, hey, I'm 20 years old, I'm getting in massive debt. Here's this giant, super secularly growing industry where like I try to equate it like when you heard about the 18-year-old that got a job, they dropped out of high school, they got a job on the New York Stock Exchange floor, and they're like, I'm going to be a trader on the floor of the stock exchange. Like I'm going to make $100,000 this year and I don't have a high school education. If this happens, do we get into a world where people are like, holy shit, like I'm getting into debt. Meanwhile, Dylan is growing his wealth out of debt and like actually growing businesses in this new ecosystem. Do you think that switch ever flips for your generation, or is it the culture too ingrained in this like institutionalized thought?
I think it switches. I think it flips for sure. I don't know when, or if it's an exact moment, or if it's like Bitcoin plays a part, but more of just kind of like just a trend that was kind of occurring beforehand of just like we're this digitally native generation, like whether it's digital money or digital education, like I can't remember life without YouTube, right? Like I don't. It's hard for me to remember life without the iPhone, as crazy as that sounds. And so like
Yeah, that makes me
more
feel
people. Yeah, I don't know. I think just in general, you're gonna have more people just considering the costs, especially as things like Sailor Academy or whatever. Like, hey, education about Bitcoin or coding or whatever it is for free. Like that's just that's a reality that's going to become more and more powerful in my opinion. And hopefully like I applied for a job, and the fact that I didn't have a college education wasn't like an oh no, it was like, oh wait, you dropped out of school for this, like that's awesome. So
the employer, there is a psychological change from the employer, because it's like
totally.
it's almost like I didn't need all these things. You can figure it out online. The transaction costs for information are negligible. One of my buddies down here is this guy named Taylor Pearson, and he wrote this book called The End of Jobs. And I'm hoping to interview him on my podcast soon. But basically, he's like, the transaction cost falling to like zero essentially like decentralizes all the power control systems. It's what like the printing press did to the Catholic Church way back when. And I think you're like the living embodiment of what that means for the next generation. So I'm really, it's awesome to meet you virtually. Hopefully we can get a beer when you turn 21. It's on me. Maybe we'll see before then. But yeah, really, really excited to follow your career too, Dylan. I appreciate you coming on.
Appreciate you having me, man. Thank you.
All right. Thanks, dude. See ya.